Good afternoon, everyone. I, Dr. Sunita Nikam, welcome you all in today's session. We are delighted to have you all join us today for this special session organized by Institution Innovation Council at Symbiosis Center for Distance Learning. Today, we are not only conducting a session on a vital topic for aspiring entrepreneurs, but also celebrating World Entrepreneurs Day, which was there on 21st of August. So that was a day dedicated to recognizing and honoring the hard work and innovation of entrepreneurs around the globe. So World Entrepreneurs Day celebrated annually on 21st of August. It is a day dedicated to honoring the contributions of entrepreneurs worldwide. This special day highlights about innovation, creativity, then determination that all entrepreneurs are bringing to the table, driving economic growth, then creating jobs, fostering new ideas that will shape the future. And it is a day to acknowledge the hard work and the perseverance of individuals who are dare to dream big and turn those dreams into the reality, the ground reality. The significance of World Entrepreneurs Day extends beyond recognizing established business leaders. It also serves as a source of inspiration for aspiring entrepreneurs, encouraging them to pursue their passion and create impactful solutions to the challenges we face today. Celebrating this day not only shines a light on entrepreneurs' journey, but also reinforce, I think, the importance of entrepreneurial ecosystem, which is supporting innovation and sustainable development. So whether through the startups, maybe through small businesses or through the large enterprises, which are actually playing a vital role in advancing the technology, improving the quality of life, driving the social changes. World Entrepreneurs Day reminds us all the power of entrepreneurship to transform communities and build a better world. Today we actually celebrate the spirit of entrepreneurship and the visionaries who are building the future. Normally all the entrepreneurs are talking about that, have a great vision, you can set your own goal, then work towards that goal, follow your own passion. And obviously there are some life changing rules also, which if we are applying that rules throughout our life, obviously we will be successful in our entrepreneurial journey. So with us today we are having a successful entrepreneur who will give a valuable insights into the world of angel investments and venture capital funding for early stage entrepreneurs, which is a crucial area nowadays. Who is anyone is looking to start or grow business. I'm confident that today's session will provide you a practical knowledge and the much more inspiration. It is my absolute pleasure to introduce today's distinguished speaker, Mr. Mayur Mehta, a seasoned professional over 23 years of extensive experience in finance, investments, startup advisory, business consultancy. He is actually a director and managing partner at Cohen Consultant, and he is also a founder of Arihan Consultants, a firm that has been instrumental in supporting early stage startups through funding and strategic guidance. Mr. Mehta's renowned career has been seen him successfully cater to a diverse business across the Gulf, Africa, India, and South Asia, establishing a deep and lasting business connections in these regions. Mr. Mehta's expertise lies in his profound understanding of both international and domestic trades, dynamic and the complexities of the banking sector. His analytical skills, strategic insights, and advisory capabilities have made him a trusted partner for business looking to navigate the challenges of global market. His thought, leadership, and commitment to continuous learning have passioned him at the forefront of his field, always staying ahead of the latest trends and sectoral developments. He has actually a keen interest in finance, product markets, and trending technologies, leveraging his analytical prowess to identify new opportunities and drive growth. Beyond his professional accomplishment, Mr. Mehta is dedicated to engaging with entrepreneurs and learning about new business trends and ideas, ensuring that his knowledge remain relevant in an ever-evolving global landscape. His commitment to excellence, proactive approach to staying informed, and a passion for innovation define his approach to business and strategy. So please join me in welcoming Mr. Mayur Mehta for today's session. Before sir take the virtual podium, I have just a small announcement that we have muted all participants throughout the session. Uh, when sir wants to talk to anyone, you can either raise your hand or we can unmute all the participants. Otherwise, at the end of the session, we can unmute everyone and you can interact with Mr. Mehta. So the virtual podium is yours, sir.
Thank you. Thanks a lot, Dr. Sunita. Thanks for your humble introduction about me. Though I'm not, I'm just as simple as any other people over here and across the stage. But it is like that. Thanks for this introduction. So, hello all. Very good afternoon to all of you. I hope you guys are very much into pink of your health and you are doing great in your fields. So yeah, though it is unmute, but it would be better if I can know a little bit about you guys. If you can put a little bit about yourself in the chat. So I just want to know whether you guys are entrepreneurs or you guys are also doing some other kind of business or something like that.
Sir, if you want to interact with them, I can unmute everyone.
Yeah, it's okay. It's okay. You can do that.
Yeah, okay. Yeah, done it, sir. Now everyone can interact with you.
Yeah. It would be better if you can, if you guys can turn up your video also. I can see your bright faces, if it is possible. Okay, not an issue. So we have Adi Ansari, we have Manmohanji, we have Balaji, we have Manoj Parab, Pawan, and we have Srinath as well, Adi Jina. Welcome all of you guys. So Manmohanji, you have video with us.
Yes,
Welcome
sir.
to you. Can you tell me something about you? What exactly you are into?
Yeah, sir. Thank you very much for this opportunity. I am Manmohan Thaplyal and I am CFO from last 11 years. I am working in Africa. So I am also alumni of SCDL.
Oh,
So I
great.
did finance and now I'm doing pursuing my SCDL. Apart from that, I did my master in commerce. Then SEMA, I am pursuing SEMA and CMA USA.
Wow, great.
So
So there is
thank
a
you very
learning
much,
from
sir.
you. There is a learning from you.
Yeah, it's a learning from everybody. It's not, and sir,
Right.
last
No, no,
11
actually,
years, yeah, I'm not only working the finance side. I'm helping the businessmen how to grow. I want the funding also, like a small fund we have to manage in Africa. So in that opportunity, we are working and lot of seminars and all helping us in
great,
that environment because
great.
their environment is very challenging and
Right,
dynamic.
right.
Yeah.
So which part in Africa you are?
In Ivory Coast, sir.
In
Francophone country, yeah. Ivory Coast.
Ivory Coast.
Yes, sir.
Okay,
West
okay.
Africa.
In 2004, I was your neighbor. I was in Guinea, long back.
Okay. Okay.
Anyways,
Okay.
so I have roamed Africa from east to west, so I know Africa. Anyways, it's great to interact with you. We have Adit Jena as well. Aditji, would you be liking to introduce yourself? We are not able to, Aditji. I think you are on mute.
Now you can hear me?
Oh, yeah, very clearly, sir.
Good evening, Mr. Mathur.
Mayur here, sir.
Okay. And I'm from Bhubaneswar.
Oh, wow, great.
Okay, and we are a very big group where we have our engineering college, we have our management college, we have our school, and I look after the entire training portal. And we are a partner of SDLC. Dr. Sunita Nigam is our head, and we are into that. And whenever this type of session comes, I try to be in this particular session. It is very enriching and thoughtful. And this is a new thing being an entrepreneur, you should know what is angel funding and you should know venture capital. Okay, these are the new things, but it has what I'm expecting from your input will be that what are the positive, because this Indian gray market has used this VC in a very, very debacle manner. And there are a lot of startups by name only, they are startup, but nothing they are doing. Okay, so it's a big challenge for the, because I'm also very close to the state government and even in the central government,
Correct.
things are absolutely misappropriated, okay,
Yep.
to a greater extent. So now the new government is again looking into the pros and cons. So let us see what is the outcome. So I'm looking for a very insightful, because you are so experienced, so you can guide us how to go about it.
Surely, sir, I'll try my best to make you understand these things in a very layman's language so that we can take something ahead. And I hope I would be helpful to you guys. Great. We have Sudhir sir also. Hello, Sudhir sir.
Good afternoon, sir.
Good afternoon, sir.
This is Sudhir Sinha. I'm from Patna. Actually, I am working as an assistant professor. I shifted from the corporate to academics. I am here working as an assistant professor. I am a
Great.
CFP. I'm a chartered wealth manager, alternative investment manager. I have worked as a senior vice president in a corporate and then shifted to academics. I'm a very since I'm heading incubation and innovation in my college, so I just want to enlighten myself from your views about the VC or venture capital or angel funding, like.
You are already enlightened, sir. You should give us some light.
I'm a 24, almost 24 years experience I'm having.
Wow.
So
Great, great, sir. So it's great interact with all of you, super smart people, and it is my pleasure and honor to be here with you and to discuss all these things. So I'll just give you a brief introduction about myself, though Sunita ma'am has already given. I am the founder of Arihan Consultant, which is established in Pune, and I am also director and managing partner of Kohan Consultants. So in these two consultancy, what basically we are doing is we are trying to serve startups or the growth level companies in different manners. It is not only uh, the fundraise all the time, though it is our core. We have relations with around 200 VCs and PEs in India and abroad, through whom we do try to assist the startups or the early stage or the growth level companies to get investment. So this is one part. Apart from that, we are also looking to help these people, whether it is growth level companies or a startup, to give them the market linkage or some kind of JVs, or sometimes if it is having M&A or some the stuffs like that, right? So that they can grow in a different manner, because only raising money is not enough to make a growth in any business, right? सिर्फ पैसे से नहीं होता है. So you need market, you need linkage, you need some kind of different say supports, be it on a technical side or something like that. So we do assist startups on that level also, and we have assisted several startups from different sectors, because we are sector agnostics. Almost all the sectors we are serving, be it tech or non-tech, and this is how we are doing. So on the fundraise side, the latest we did is for a cybersecurity solution, which is a patented solution, and which is the company is based in Bangalore. So we raised over $3 million for those people with four different VCs. One of them was from Dubai. Apart from that, very recently we have closed one central government deal for an overseas for an abroad where they are looking for some very specific technical solutions for their government organization, and we did that. So by first week of next month, it would be operational. So this is what we do. And apart from that, we are also working with a very big company from Singapore. It is a $10 billion company, and we are arranging a joint venture for them with an Indian company, through whom we will take their products to the Gulf and Middle East and North African region. So this is how we do support startups or companies like that. This is the nutshell that what we are doing. Okay, so let's take it ahead. I would just like to know that since this buzzword startup, it has uh, grown like a wildfire, right? Since last 8 to 10 years, though in India it started in 2008, I guess. when Flipkart started. But पिछले 8-9 साल में startup ecosystem it has grown in India like anything. And in India right now, more than around 117,000 startups are there, registered startups, and they are doing good. So I would just like to know from you that how exactly you look at the startups. What is the startup, and what do you think about that? I just wish to get your views. So if anybody can give me an insight, Mr. Sudarshan. Hello. Okay, so I think everybody again on mute. So okay, fine, not an issue. What we can do is I have created a small presentation on a layman's language. I'll just uh, share that with you on the screen, and just let me know if you can see that. Just a minute. Hello.
Yes, sir.
Sunita ma'am, can you help me out with this because I'm not able to share my screen over there? Or you have this presentation? Can you do it for me?
Yeah, sure, sir. Sure.
Yeah. Hello.
Yes, sir. I'm just sharing the
Okay.
presentation. Yes, I hope, sir, this is visible.
Yes, yes. Is it visible to all the participants? Kindly say yes in the chat.
Yes, sir.
Yeah, it's visible.
Great, 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 great. So here we are willing to understand the startup ecosystem. And now, what is startup? And before startup, this is journey. This is journey for an entrepreneur. But for that journey, one traveler is needed. So when this in here, the traveler is entrepreneur, right? Ma'am, next screen, please. Yeah, no, no, yeah. So who is an entrepreneur? Now, an entrepreneur is an individual who identifies a business opportunity and takes the initiative to start and build a new business, right? So, startup is also basically a business, but it's a business with a difference. I'll tell you the difference. And in here, after this technological revolution, especially in India, and the young generation, they have taken up technology with a boon, and they are using it in the best way possible. So they are first identifying a particular issue or the problem from the daily life, and afterwards they are taking the technology, they are taking the assistance of technology and bringing some solution to this particular problem, so that a normal people or any normal individual who is facing this problem, they can get rid of it, and they can use the time in a very proper manner. So we have seen Ola, we have seen Uber, we have seen Flipkart. All these platforms, they have served us like anything, and people are enjoying using those services, and that is the reason those startups they have grown, right? So entrepreneurs are often seen as innovators. As I mentioned, they are bringing some solution, they are bringing some innovation with the technology or without the technology. They might be bringing some kind of products as well, and this is how they are working. And due to all those reasons, their growth can be enormous in comparison to the traditional business. So this is how an entrepreneur works. Next slide, ma'am. So now here is startup. What is startup? As I mentioned, startup is basically a business with a difference, right? So startup is a newly established business, typically founded by entrepreneurs who develop a unique product, service, or technology with the aim of bringing it to market and scaling it. Generally, startups are business ideas challenging and or transforming the traditional business practices and bring ease to the customers. As I mentioned, what Flipkart did in 2008, nobody even was in their far dream. They could think that something like that can happen. So they have brought in the technology, and they brought in the products to your doorstep without doing anything. Earlier, what we are doing is we are going to mom and pop shops, we are selecting the products, buying them, and bringing them. Now everything is on the tip, on on your mobile. It is on your hand. So thousands of products, or even I would say millions of products, are available right on the click. So this is the innovation, and this is the gap that Bunsel's brought in and filled up, and now where they are, everybody knows. So this is the startup, right? So unlike established companies like the mom and pop shops or any trading house or any small say manufacturing companies, these startups are they start working with a very limited resources, be it team size, be it some say working space or something like that, and they almost rely on external funding. Why external funding? Because in general, startups work as an asset light model. Now asset light is basically they do not have any kind of assets like shops or machinery or something like that at most. So if they go to the bank and they ask, hey, I need a money, so banker would deny that, because banker generally do a secured loan, secured lending, right? So that particular model does not work for this startup. Hence, the new concept of angel funding or investments or venture capital or private equity came into the picture, where different people, different set of people who are having good money in their kitty, and they are willing to grow their money in a different manner where they can get ROI in a very faster manner and in a very big manner. Of course, they do invest in equities, but equities work and it takes a little longer than the this kind of investments, right? So we will also discuss that. So this is how the startups are relying on external funding. And if you see most of the startups in India or anywhere else, there are at least two people, two main promoters are there who are heading those startups or those businesses. They are called founder and co-founder. And I think this is a very brilliant idea. Of course, it was earlier also where partnership firms hoti thi, abhi bhi hoti hain India mein, where two people are coming up, they are bringing similar amount of money or something like that, and they do run. But still, those are traditional businesses. They are into the traditional work atmosphere, so they can grow in that manner only. They cannot grow as startup grows, right? So this is the difference. Now here, founder and co-founder, they may bring money, they at same money, or probably one guy can bring up money, another guy can bring up experience or something like that, or the network, something like that, and probably they can diversify their roles and responsibilities in that particular startup so that they can keep focus on the growth rather than doing day-to-day jobs. So this is how startup is different, right? Now, key characteristics of these startups. So there are 5 or 6 characteristics. One is innovation, second is scalability, third is high risk, fourth is agility, funding, and the lean operations. So innovation, as we all know, almost all these startups or most of these startups who are backed by technology, they are bringing some kind of innovation or some kind of different working experience to the customers or the target customer, and this is how they are winning, right? So innovation is the key with the help of technology for any startup. If there is no innovation, it won't go beyond a certain level. So that is the one key. Second thing is scalability. Startups, as I mentioned, startups are highly scalable. Of course, there are pros and cons. It depends on the operation, it depends on the funding and several other matters, but still the scalability and the growth rate of that startup is far higher, far better than the general businesses that we do in a daily basis, right? So scalability is again there. And yes, the third one is high risk. uh, since startup they do not have at most of the time, and most of the startup they do not have assets, they have high risk. They can grow like anything, they can grow in a faster manner, and at the same time they can go down in that way. If something happens, at most of the time it happens when they are not able to raise the fund. The plan is good, the business idea is good, but somehow they are not able to attract the investments, and they cannot move further. The second scenario can come up: they have raised some fund, they have grown, but they did not modify their business module. They did not bring something new to the audience, and at one point of time they become stagnant, and then they go down. So these are the reasons where we can say, of course, startups are high risk, high gain module. And agility is one of the very key characteristics of the startups. What agility means is, as and when required, startups can either change their business model, or they can bring something new, products or services, um, in different periods, so that they can grow accordingly. Say for example, I'll give the example of Zomato. What Zomato did is they started with a table booking, a restaurant table booking. They grew. They Since it was a very innovative idea, they took some funding. They uh, grow at a level, but after a certain point, they found that they are getting stagnant, because there is nothing new to offer. And then this idea became where they have started home deliveries of the foods ordered to the restaurants. And now we know they have created a history. So this is the agility that anybody can bring up with the startup idea. Funding, of course, as we discussed, startups are supposed to get external funding only, be it angel funding, investments, venture capital, private equity kind of thing. So this is external funding. And lean operations, as we discussed, they start with a very small team, very small resources, and as and when they grow, uh, things happen. Right. So now here is the term startup versus traditional business. What is the differentiation? So, ma'am, if you can mute these people, we can discuss with that.
Yes, I'll do.
Yeah, thank you. So, audiences, here, because as I mentioned, startup is also a business, but business with a difference, and uh, we saw all the characteristics. So, I just wish to take a practical example, right? So, probably we can have a role play here. Say, for example, Sudhir sir is having a traditional business, and then Miss Sunanda is having a startup, right? So, Sudhir sir, what exactly you are doing a traditional business? So, what exactly you are having within your business? What is the characteristic of your business? And we can compare it with the startup of Suninda ji, if she is okay with that. Can we have that? Hello?
Yeah.
Yeah. Sudhir sir, you are there.
So can you elaborate it this again? The startup versus traditional
Yes.
business.
Yes. So, as I mentioned, startup is nothing. It's a buzzword. It came from West, thanks to those people. But it is basically a business. It is basically a business, but a business with a difference. So there is a huge difference between the traditional kind of business that we normally see in our daily routine, and there is a startup. So the pointers, the basic pointers, the basic characteristics we saw in the last step, where what kind of characteristics startup is having. So I just wanted to create a role play just for 2 minutes, where one person, he can assume a bit in here, say Sudhir sir is there, so he can assume he is a business person, he is having a traditional business, a family business he is running. And there is our another role play partner, Miss Suninda, is here. If she is okay, she can assume herself as a startup, as an entrepreneur, and she can define herself so that we can understand the difference between traditional business and the startup business. So this is what
Hi,
we are
sir.
doing. So
Hi,
who?
sir.
Yeah. So Surinda ji, would you go first?
Definitely, I have no problem.
Please go ahead.
Now, being a startup, it is that I am developing a innovative way to do some kind of a service or business idea
Yep,
on my own
certainly.
at my level, whereas
Yes.
a traditional business could be something which has been going on from family to family, or we have learned from somebody and are going through the traditional business, like a grocery store is there.
Oh yes,
Beside
certainly.
us, we open another grocery store. That will be a
Perfect.
traditional business.
Perfect.
Whereas for a startup, it will be delivering of those groceries to the house.
Yes. Yes.
Am I right?
Yes. Perfectly. Delivering those groceries to the house with the help of technology.
Definitely.
Yeah, because delivery तो grocery store वाला भी करता है.
जी जी जी.
Right. So there's a difference. Yeah. And okay, so we will go point by ways. So first is the growth. Whatever we are doing, we are looking for a growth. Any entrepreneur, any business person, nobody is looking for a loss or just for fun, right? They are looking for growth. The growth in market, the growth in money, the growth in name and fame, something like that, right? So if a startup is there and if a traditional business there, the major difference is the rate of growth. Startup is mean to be to achieve the rapid growth, while traditional businesses, they definitely grow in a better manner, but they focus on the steady and sustainable growth, right? It is not like that कि कोई grocery store वाला है and immediately, for example, in an year he is doing a 50 lakhs of revenue. In the next year he can jump out to 5 6 crore revenue. It is not going to happen. Yeah, he can grow to 50 lakhs to 60 lakhs or 75 lakhs, something like that. So this is a focused, steady and sustainable growth for the grocery store or traditional business store. While startup, they can go on valuation support, and this is how. So suppose if startup is doing a revenue of 1 crore, it is possible that the next year they can grow 2.5 crore, 3 crore, or probably 5 crore. This is how they grow because they attract masses. While traditional business, they do not attract masses. They have a set of consumers or a set of business partners who bring them the revenue. So there is a big difference in the growth. Second time, as Suninda ji rightly said, innovation and use of technology, startup can do that so, but traditional business, they normally do not get deep into that kind of technology and improvement. Yeah, they do incremental improvement, like पहले जो accounting होती थी वो manual होती थी, then tally आ गया, and then with the help of tally, those people are very fast into doing the accounting and see the growth where the business is going, whether it's going up, down, or which segment is doing good, which segment is doing not so good, something like that. So now this is a technical innovation and improvement in the traditional business, but not in that manner where they can grow substantially. So these are the 2 points. Third is high growth model, as you mentioned. Yeah, startup is a high growth business model. Comparatively, in a very short time they can grow, while traditional business, they cannot grow in that manner. In terms of funding, without funding, no business can grow. Funding is kind of blood to the business. So as we discussed, startup mostly rely on the unconventional funding, kind of angel investments, grants, government grants, venture capital investments, kind of those. And these type of funding, generally, they do not attract they do not go into traditional businesses. Traditional businesses mostly rely on the bank loan or the nears and dears, where from whom they can get unsecured loan kind of things, and then they grow. So this is the major difference. Now, in terms of decision making, there is a difference between the startups and the traditional business. In traditional business, most of the time, what happens, because mostly the uh, traditional business remains family owned business, the legacy comes up, or otherwise they are, if they are a little larger organization, the corporate organization, there might be hierarchy, the managing director and the CEO and CF and all those people kind of that. So decision making is it happens in a different manner. If you look at the startups, there are founders and co-founders. So early decisions at the initial stage, they are very fast because the founder co-founder, they can take their decisions because they have not taken much external funding from any additional investors. So probably they might be bootstrapped, or they might be supported by friends and family only at the first stage. Then gradually when they grow, the different kind of startups or the strategic investor, they came investor or strategic investor, they may come into the picture. And if any decision is to be taken for the growth, for the fundraise, or to bring up any new product or services in the market, uh, different viewpoints come together, and probably they can come up with a better solution, better product or services according to that. While in traditional business, as I mentioned, mostly they are being run by promoters or the partners. So viewpoints are not that much impactful in that particular business segment, and this is how it runs, and that is why they are differentiated from the startups. Agility is again the thing with the startups. In traditional business, transformation or changing of the product or services or bringing something new is very difficult. It happens, it may happen, but it may take a little longer. But in startups, they can do at any point of time. So these are the key differentiators with the traditional businesses, and this is how startups are winning against the traditional businesses, right? So now comes to funding part, which is the main part, money making, right? So startup funding. So let's dig it deeper. Startups, as we discussed, startups are relying on external funding only at most after the bootstrapping stage. So different kind of stages are there for the funding. हर स्टेज पे स्टार्टअप अलग अलग तरीके से फंड ले सकता है और अलग अलग लेवल का फंडिंग ले सकता है. It start from pre-stage, then seed stage, then pre-series A, series A, B, C, and beyond, and then the IPO or the merger and acquisition. So this is how the life of startup is, right? So we can understand it in a nutshell, stage wise. Ma'am, please next. Yeah, so pre-seed stage. So pre-seed stage, basically, this term has arrived from agriculture point of view, I would say. Like कोई एक किसान है और उसको अपने यहाँ फसल उगाना है. So when the rainy season is coming or when the sowing season is coming, what exactly he did, he first of all he thinks about what kind of crop he would need to grow. So पहला तो वो डिसीजन होता है. उसके बाद होता है the arrangement of the seeds and everything, which kind of seeds, कौन सी कंपनी का सीड लेना है, कौन सी कंपनी का फर्टिलाइजर लेना है. This is how he does the market research a little through his friends and families or through the chopal, which happens to be in every village in India. And this is how they discuss and they take the things and they take note of it and finalize the things. And third thing, to arrange the farm, right? There are several weeds and all those kind of stones and everything is there on the farm. They complete all the things. Either they burn out the weed or they just cut off the weed and clean up the space so that they can sow the seed. They also plow the farm and keep it ready for the sowing. So this is the pre-stage where uh, uh, they have made their farm or the agri land ready for the sowing. So this is a pre-seed stage. The same thing is happening with the startups, right? So in pre-seed stage, any entrepreneur, number one, they think of the problem, right? What kind of problem is there? What kind of issues are there in the public? Number one. Number two, they get information about that. Okay, so these are the problems. So what could be the solution? What kind of solution people are looking for? Number three, what kind of technology we can use it to bring the solution to that. Number four, they gather the market research report and all those things. According to that, कि ये अगर मैं business लाता हूँ, ये कितना grow कर सकता है, किस level से grow कर सकता है, what kind of people I would need, and this is the thing. So these are the pre-seed stage where the entrepreneur is having an idea, he is having a solution in mind, and he wants to grow ahead and he wants to take it to the next level. So this is the pre-seed stage, right? And this pre-seed stage at mostly India में बहुत कम होता है, almost नहीं के बराबर होता है. It happens like bootstrap, जहाँ पर entrepreneur जो है वो खुद का funding जो है they do self funding, or probably they can bring up their friends and family along. They discuss the idea with them, and if they like it, they give money to the entrepreneur so that he can take it to the next step, right? So this is the pre-seed. Now it is the seed stage. Now, as I mentioned, after the farmland is ready, the farmer bring up the seed, bring up the all the fertilizer and everything, and he started sowing the seed of the ground and starts watering into that. So the same way, now the idea is on the MVP level, where is the minimum viable product. The entrepreneur would create that platform or to create that particular product or services, whatever that he would create that, and that funding would also be used for the product development, further market research, early marketing efforts, and probably bringing up some kind of customers to the table, or the users who can use their product or services, and a small revenue is being generated. So this is a seed stage startup, where startup is having some kind of market relation with their product or services, right? So this is it. And here angel investors come, who are the private investors who are having HNIs or UHNIs, who are having good money to invest in, and they may probably invest into the startups. Some micro venture capital, they may also come up in the plan, and institutions are also supporting as accelerator or incubator, where if the product, there is no product, but the platform, technical platform is there or something like that, or some kind of software is there, they can give office space to the startups, and they can also support on the guidance and the technical support to the startup to bring up that particular service or the software to the market, to the learn. So this is how it is. Now, pre-series A. So pre-series A is basically, I would call it a sandwich stage between seed and series A, right? So in seed, as we saw, that the MVP is available, the minimum viable product is available. Some users are available who are using that. They may find some flaws in that, or they may find it good to use it, and word of mouth publicity is going on, and some small kind of revenue is there. Now, pre-series A funding is basically the best kind of funding, I would say, because is funding, say startup can take a growth like anything. I'll give you the example also, right? So pre-series A में आपके पास revenue होता है, आपके पास एक customer base आ जाता है इस seeds के बाद, and then you bring up the strategy for the marketing, like go to market strategy. You bring up the strategy, हमें regional wise grow करना है या national wise grow करना है, or we want to go to international wise, whether we want to bring a new product and service along with the first one, or इसी को बढ़ाना है, what kind of customer acquisition we should do. So all these strategies come up and business grows with this pre-series A funding. So this is a very crucial funding, but very, very meaningful funding according to my personal experience, right? And most of the investors who are there in the pre-series A, whether at most it would be venture capital funds, and sometimes strategic investors are also coming up. Now, who are the strategic investors? So strategic investors basically, say for example, if there is an EV, two-wheeler EV manufacturing company, I won't say a name, you might be knowing that. So those people have strategic investors. So similar kind of product and services, but not into EV. There are some big guys in India who are having traditional business since families, and they are having big money to it. So rather than bringing their own EV vehicles, what those people do, they get in touch with these people and they say, okay, ठीक है, मैं आपको पैसा देता हूँ, you grow ahead, right? So I will give you money, whatever, whenever you need, what kind of money you need, you go ahead, and I would be having a stake in you. So this is how it grows. So they bring up not only the money, but the market as well for the startups. And while a startup is clearly focusing on their technical expertise to bring in this EV to the market, and this is how both the companies can grow. So there is no additional burden on that company which has invested into the EV, right? उनको additional business नहीं करना है, उनको कोई एडिशनल इंफ्रास्ट्रक्चर खड़ा नहीं करना है, अलग से लोग नहीं लगाने अपनी कंपनी में उस पर्टिकुलर प्रोडक्ट को बनाने के लिए, फिर उसका MVP और मार्केट टेस्ट करने के लिए. नो, इट इज नॉट लाइक दैट. दे वुड जस्ट नीड टू पुट इन द मनी. दोज पीपल वुड work and bring up the product in the market, and these people would support them in the marketing of the product as well. So this is how the growth would be much faster than the general way. So this is how pre-series A funding works. उसके बाद आता है series A, B, C. This is basically a growth level funding. This can go to F, H, LM kind of thing. जब तक वो fund raise करना चाहे वो series में आगे बढ़ता रहता है. And this is a growth level company. This is a stage where company has grown, company has a substantial revenue in their kitty, right? And apart from that, they have very good market presence, they have very good customer acquisition, and they need to grow further, probably domestically in the different region or different states, or probably internationally, or they might be willing to bring in some new products as well. So uske liye series A, this growth level funding, it is being used, right? So in this funding, earlier investors who have put in as angel investments or seed investments or probably pre-series A, they may take a partial exit or full exit also to the new investor, and the big money would be coming up, right? So the cap table, जहाँ पर shareholders का details होता है, that can be adjusted according to the new funding coming up. So कुछ investors बाहर जा सकते हैं, कुछ नए investors अंदर आ सकते हैं, and the money would be helping the business to grow. So this is how this works, right? So these are the growth level companies, and finally it comes, startups comes at a final stage where they may be acquired by a major player, number one, or probably if they don't want to be acquired but they want to grow ahead and they don't want to work into any other company, like they don't want to lose their identity which they have created, so they can go for the IPO, that is the initial public offer. They can go to the public, right? So merger acquisition, as I mentioned, some big any other strategic player or a big group is there who is having good money and they are looking for that particular startup. Okay, hey, let us sit together, let's come across a valuation and I want to buy you out. So this is one place जहाँ पर for example कोई भी एक startup है and they are valuing at 200 crore rupees. A bigger player, say kind of Reliance, he would come and say, okay, ठीक है, आप ये 200 crore लीजिए, or whatsoever the discussion is there, and then the company is with the Reliance, right? It might be Reliance, or Reliance may keep the brand same as it is. It depends on their mutual understanding. So this is the merger and acquisition, and IPO is something where public is the investor, right? It will go on the BSE or NSE kind of platforms. They would raise the money from the public, and from that money, all the investors, they will get their own chunk of share, whatever percentage they are having. They can get their ROI according to the valuation of that particular IPO, and then the company would be handled by the public at most. So this is how the startup funding is happening, sir. And there are types of fundings, as you mentioned. Bootstrapping, pre-stage में जो हमने देखा bootstrapping होता है, जिसमें it would be a self funding. Friends and family, they can also come together, they can give some money to their beloved, and they can grow together. Then accelerator and incubators come up, who can give the space, who can give the technology, who can give the guidance to the startup, to the mentor. They mentor the startup, and they help them grow. Third is grants, the government grants. Government also support the startups in different manners, especially if any startup is from the sectors like healthcare or agriculture, uh, or kind of defense. अभी defense में बहुत चल रहा है. So they give us a particular amount which is non-refundable. It is up to 50 lakh rupees. The grant is called BIRAC grant, BIRAC, and through that 50 lakh grants, the startup can grow in a manner by technological advancement or bringing some kind of strategy or the team or something like that. They can utilize that money. They do not have to give that money back to the government. So it is a benefit for them to grow at a level, to grow at least at a seed stage level, right? Once the seed stage is coming up, angel investments or strategic investments would be coming up. Of course, the amount would be lesser than the pre-series A kind of thing, but it would be very much meaningful for the startup to grow further. venture capital, now these people are the backbone of the startups, right? Now, who the venture capitalists are? Venture capital and private equity are basically, those are the investment institutions or the investment companies who take the money from other big investors, private investors who do not understand the things, but they do have funding and they wish to get good ROI out of that particular money. So these people, they create a pool of money, and then they have their own strategy, they have their own preferences of these sectors, and they have their own preferences of the stage where they wish to put in this money, right? Say, for example, if any particular VC, they have raised around $200 million from the from different investors, and they have their own sectoral preferences. Like, koi VC hoga who would put into deep tech, another VC would be putting into agri technology or the e-commerce or the marketplaces, or some people would be putting in the healthcare industry, like that. So they have their own segments. Now they have their own pockets as well. Some startups or some venture capital, they would go for say $1 to $5 million they can invest. Some VC would say, okay, no, I'm not comfortable with 5 million, but okay, we can give you anywhere between 500,000 up till to $2 million. So this is how it is. This is how it is work, and this is where the startups fail. So suppose if anybody is there, any startup is there, and they do not know how the VC work, right? So generally, what happens in the market? Uh, Startups, they bring up the list of venture capital, they do start approaching those VCs, and that is where they lose, right? Because they are approaching those VCs who are not from their segment, right? So for example, as you mentioned, सुनिंदा जी ने कहा कि ठीक है वो grocery delivery kind of Dunzo उनके पास है, and Dunzo. But if Suninda ji is not aware of this particular thing, what she would do is she would just try to mail up her pitch deck to the investors, different investors, be it private or venture capital fund. अब उन्होंने mostly उन VCs को approach किया who do not invest in that particular segment. So they definitely won't even respond to Suninda ji. And then where Sundari says, okay, what is the wrong with them, right? So this is the thing that every startup should understand, that there is a preference, there is strategy, and there is a stage where the VCs would be coming up, and they should approach them accordingly, right? At most of the time, only 3 or 4 VCs would be there who would be fitting suitable according to your stage and the funding ask, right? So you would only be having those people, and you would need to attract them and try to get their money to grow ahead. So this is how venture capital investment works. And in here, the consultants like us, they do help a lot to the startups, because it is not only pitching the investors and getting the money. There is a lot of work to be done in that particular segment to get the money, right? It is not that easy to fetch money from anybody, right? Even in the general concept, if we are standing up somewhere and if somebody unknown comes up and say, sir, mujhe 100 rupees dijiye, we are not going to give them, right? So it is like that. So getting money is an art, and one should create that art in a better manner. So this is how it is. Right from starting, right from creating the pitch deck up to the presentation and up to the making them understand the concept and the growth opportunity in that particular segment is the key to get the money from the venture capital. The same way private equity happens. Private equity happens in a very larger scale, right? Mostly where the startup is at a very growth level stage, where they are having a revenue of 200, 500 crores, and uh, they either want to acquire a similar smaller player, or they want to grow internationally, something like that. When this private equity comes up, and they can go anywhere from 10, 20 million, 50 million up to 100, 150, 200 millions also. So this is how it is. And then initial public offer, as we discussed, startup goes to the public, they get listed into a BSE, NSE, NASDAQ, or any damn platform, and then money comes up, right? So this is how it is. So till this stage, I would like to hear if any questions are there from any of the audience. I would like to interact.
Yes, sir. Manoj here. I'm audible?
Yes, yes, yes.
Yeah. I just wanted to ask you regarding seed funding, the grant. which we are getting
Yeah.
as a when you registered as an Indian startup.
Hmm.
The criteria which on the paper is different, and when actually when you are granting the grant to the individual startup, because there what I understand is innovation is not that important. Important is how the revenue generation model is that. Because if you take the start when you discuss about the startup, the base point is your innovation, your idea. So can you give me the, I mean, can you elaborate on this, how they will be choosing for the grant seed funding?
Right. So grant is
Specific
basically, yeah,
criteria or specific.
correct. So grant is basically coming from the government, right? Whichever the institute you are working with or you are incubated, those people would be the right people to guide you on that, and they can vouch for you. Okay, this is a startup and this is the idea. Say for example, I'll just give you an example. There was it was our client, right? They were from Pune. Now they have gone to US and their parent company is now in US. So what they brought in is they brought in a multi-dimensional ब्रेन मैपिंग सॉफ्टवेयर, राइट? जो मार्केट में अवेलेबल था वो 2D था एंड इट वाज नॉट गिविंग द रिजल्ट्स और द रिपोर्ट्स और द इमेजेस टू द डॉक्टर्स, जहां पर डॉक्टर डिफाइन कर पाए कि फॉर एग्जांपल किसी पेशेंट को अगर ब्रेन में ट्यूमर है तो वेयर एग्जैक्टली इट इज। जो एग्जिस्टिंग था वो ये बता रहे कि हाँ इस एरिया में होगा, काइंड ऑफ दैट। नाउ दीज पीपल दे कम अप विद अ बेटर सॉल्यूशन and this solution, this software was patented, and they brought in key if the image is taken with this software, it would clearly tell the doctor, okay, this the tumor is present exactly in this particular point, right? So this is the innovation. Now this is the issue, and that particular company was incubated in NCL Pune, which is the National Chemical Laboratory Pune, right? So that is also a government of India entity. So NCL itself, they brought in this solution. Ki, okay, these people have brought in something new, something great, which is beneficial to the general public for the healthcare purpose, and this should be helped from the health ministry or the whatever whichever ministry or organization is handling that grant, they should be given the grant. So with the help of NCL and with the entire data reports and whatever the software is doing that they are creating over that, and they're an LCL, they went to the government and government appreciated and they got it 50 lakh grant. So this is how it is. It is not because it is government fund, and government is not an entity, right? They are running a public fund, so they cannot fund any Tom, Dick and Harry. ये बात तो हमें समझनी है, ये बात तो very clear. It is very clear to us, right? So your product or services whatsoever is there, number one, it should be innovative. Number two, it should be or it must be, right? It must be beneficial to the public. अगर वो नहीं है तो फिर वो grant नहीं मिलता, because it is a public money and it is not refundable. तो बेसिकली आप और हम जैसे लोग जो टैक्स देते हैं उसी में से वो ग्रांट जनरेट होता है और वो जाता है, एंड इट इज नॉट रिफंडेबल. सो डेफिनेटली हर किसी को वो नहीं दे सकते. सो इट इज अ सिलेक्टिव क्राइटेरिया, एंड ऑफ कोर्स थोड़ी बहुत निटिग्रिटीज वो हर जगह रहती हैं. ऑफ कोर्स वी शुड नीड टू क्रॉस दोस निटिग्रिटीज, बट if the idea is really good, I am telling you because I have personally seen that in that particular software, healthcare software. So this is how it is. People are getting grants, but as I mentioned, government grants mostly या तो agri-tech के लिए आता है या फिर health care के लिए आता है, because these two sectors are there जहाँ पर they can attract masses, they can help the masses. So this is how it is. And the institute in which you are getting incubated, it is also very much crucial. You should select very you can say doing after a deep due diligence कि वो आपको किस तरह से help कर सकता है. So this is my intake on that. Clear, sir?
Yeah. Okay, sir. Thank you.
Okay. Is there any other questions from anybody? Okay, fine. So we can take it ahead now. What modes of investments are there? So in general, there are 4 or 5 kind of investments that are happening in the global space. Number one is equity investment, that is general investment. number 2 is convertible notes, number 3 is safe notes, and number 4 is preferential shares. Right? So we can go ahead with the equity investment first. So what is an equity investment? It is basically kind of ownership in the company or the startups, right? So generally VCs goes with the equity investments when the series pre-series A comes up, or even seed stage investment कभी कभी हो जाता है. So equity is basically where the money comes up to the startup against the equity or the ownership percentage share to the investors, right? It happens, say for whatever the valuation is there, say for example, किसी startup का valuation $10 million है, and if they are willing to raise 10% of that, $1 million. So if any investor say if I am willing to invest into that, so मैं इनसे कहता हूँ ठीक है, I'll give you $1 million against the 10%. So I would be the owner in that company with 10%, right? And this can the lock-in period means for which I cannot take my money out can be 2 years, 3 years, 5 years, whatever our mutual discussion is there. It can remain with the company accordingly, so that company can grow by using that money and they go for the next round of funding. So this is the equity investment where I am a 10% owner of the company by putting my $1 million in the company with the valuation of $10 million. So this is how equity works. Now, convertible notes. Convertible notes is basically now in India it is called CCD, or the compulsory convertible debentures. Earlier it was OCD, but OCD that was optionally convertible debentures. Now government of India, I think RBI has banned that. So only CCD is working. So what is convertible note? Convertible note is basically a kind of debt for a certain period. Say I'll give you the example for that. If any startup is there, any damn startup we can say, and the idea is good, you are the investor, the idea is pretty good, you are attracted with that idea, promoter is also good, he is having a very clear focus and vision to take the process ahead, but somehow the valuation is not being reached. Say for example, the startup is asking for a $10 million valuation, बट आप कहते हैं कि नहीं यार 10 मिलियन का तो नहीं है, ये 6 मिलियन से ज्यादा का मैं इसको एग्री नहीं कर सकता, बिकॉज इट इज नॉट देयर. ऑफ कोर्स 10 मिलियन इट वुड बी हैपनिंग इन द लेटर स्टेज. सो वैल्यूएशन इज नॉट बीइंग मैच्ड, but you are interested, you want to get in money, that guy is interested because he doesn't want to lose you and he wants to get money as soon as possible so that he can grow. So uh, 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 there is a way where both of you can be satisfied. In that particular stage आपको अभी वो valuation पे नहीं जाना है, right? You would give, say, okay, ठीक है, I'll give you $1 million, but it would be a debt and it would be attracting, say, 6% of interest per annum. And after 2 years or after 18 months, you would need to convert it, right? So at the end of 18th month, when the startup is grown, right? So there would be a particular valuation. उस valuation पे जो होगा, उस valuation पे वो convert हो सकता है, or else there are another two terms in the convertible note जहाँ पर वो term sheet पर होता है. Number one is interest. Number two is valuation cap. Means say for example, अगर startup वहाँ पर चल के $3 million का valuation हो जाता है, when you after 18 months I'm talking about, but when you are giving money, you can say okay ठीक है, मैं इसको 2 million valuation का cap लगाता हूँ, I would be converting up to $2 million. ठीक है, आपका valuation अगर $2 million है, उस टाइम पे मैं उस टाइम पे convert करता हूँ उसमें. And third would be the discounting. Discounting means you are hello hello
Yes, sir. Yeah.
am I audible?
Yes, you're audible, sir.
Okay. I thought I missed up something. So convertible note with the third term can be the discounting or the valuation, right? So for example, whatever the valuation is there, since you are supporting that startup at a very crucial stage where he needs money, otherwise he will die. So you can take benefit on that and you can say, okay, I need a 20% discount on whatever valuation is there on that particular date after 18 months. So say if you are putting 20% discount, so whatever the price share is there, say for example $1 price share is there after 18 months, तो आपको वो जो शेयर मिलेगा वो 80% मिलेगा. So this is how this convertible note works, right? Third is safe note. Safe note is almost in the range of convertible notes, but only two differences are there. Number one, there is no interest calculated in the safe note, that is simple agreement for future equity. And number two, there is no particular time period or the particular stage where it should be needed to the equity conversion, right? Say for example, convertible note mein what we can do is we can put say 18 months or 24 months or 36 months, and after that particular period it should be converted into the equity anyway, right? Whether the funding round is happening or not happening or whatsoever is there. But safe note, it is not like that. Safe note can go ahead, go along, and then probably at this stage, say generally आपने वो put in किया है कि 18 months में you have assumed that 18 months में this would be converted into equity. But before 18 months or after slightly after 18 months, if there is a chance where merger acquisition may happen or some bigger round may happen, so उस time पे भी equity हो सकता है conversion, and then at that stage probably the investor would get more ROI than the general equity conversion. So this is the safe note. And preferential shares, this is the last. Preferential share is basically it is not a debt. It is just the general investment, but the shares are kind of preferred shares where anti-dilution provisions would be there. Liquidation में preferences होता है, and voting rights would also be given to the investors, right? So what is anti-dilution? So anti-dilution is basically whenever the next round of funding is happening, some kind of equity holding is being diluted by the investors and the promoters every time whenever the funding is happening. In here, preferential shareholders, they can put in the term where whatever is there, but I'm not going to dilute my shares. Whatever my shares are there, my percentage that it would remain the same. In terms of liquidation preferences, where a startup is not growing ahead and probably they are shutting the shop down, so whatever the assets are being sold, whatever is outcome after selling those assets, the money would be returned to the preferential shareholder. This is the liquidation round. And voting rights, of course, whatever the discussion or decision is happening, preferential shareholder would be having a voting right for that particular decision. So this is how it does work. Any questions, sir? No? Okay, fine, great.
No, sir.
So now valuation game. Now this is the crucial part of any startup, and this is how any startup would run. In traditional businesses, what valuation happens is whatever the stock is there with you, whatever the cash is there in the bank and in your kitty, plus the goodwill, whatever goodwill you have created over the period in the market. So all these come together and then फिर आपका traditional business का value निकलता है. Startup में valuation उस तरह से नहीं होता. Startup is having a different valuation game, which gets defined in a different manner, right? So what is the valuation? Valuation is basically the worth at the time of worth of that particular enterprise or that particular startup, which is to be done when either a startup is looking for fundraise or they are looking for the IPO or either they are looking for the merger acquisition. In तीन steps में वो valuation होता है, and that defines whether they have grown up or whether they have grown down and how exactly the startup is happening, right? So it is basically a worth of the startup that is being defined with the various aspects. I will define you those aspects later, right? So this is the valuation, and there are two types of valuation when you are going to raise the funds. There are two types of valuation. One is pre-money valuation, and second is post-money valuation. So what is pre-money valuation? Say, for example, if any startup is having a $10 million of valuation at the time of fundraise, whatever stage is there, okay, pre-series seed, whatever is there. So pre-money valuation, and they are looking for $1 million. So आफ्टर इन्वेस्टमेंट, सो प्री मनी इज $10 million, जहां पर फंड रेस के पहले वो $10 million का इज ऑलरेडी सेट, एंड व्हेन आई एम पुटिंग $1 million, so it would be $11 million. So post money would be $11 million. So the equity stake would be coming, mostly it happens after the post money valuation. So startup is coming to me and say, hey Mayur, I want to get a 10% valuation of my valuation. I need to raise $1 million. I'm saying, okay, I'm putting $1 million. I am okay with that. So the startup would be having the post money valuation of $11 million, and I would get the equity stake on the value of $11 million, not the $10 million. Mostly it happens. Generally, sometimes investors are getting reluctant and they need कि भाई मुझे तो pre money में चाहिए. It depends. It completely depends on the mutual understanding between the startup and the investors. How exactly they wish to go. Pre money में dilution startup के लिए ज़्यादा होता है. Post money में comparatively कम होता है. So it is always suggested to go on the post money valuation fundraise. Right. So this is now methods of valuation. I think one more slide is there before that. No, it's okay. Okay. So there are different kind of methods of valuation, right? One is comparable analysis, second is discounted cash flow, third is revenue multiples, and fourth is Berker's method, right? So at most, according to my personal experience, most of the startups or the growth level companies, they do use discounted cash flow where they can define the projection. So, okay, say down the line 3 years, 5 years, or 7 years, how my business would be growing, what kind of revenues I would be generating, what kind of cash flows my business would be generating. And on that basis, whatever the figures are coming, we do take a certain discount on that, a percent discount on that, and then the valuation comes up, right? So that is called a discounted cash flow analysis. The second kind of this comparable analysis, where, say, for example, we wish to do the valuation of Amazon, right? Now there are two players, similar players, Amazon and Flipkart. So if Amazon is a startup, we do not know how the Amazon valuation हम कैसे करें, because it has recently started, or the metrics are too high, so it is difficult to measure the metrics with discounted cash flow. So what we would do is we would check out the Flipkart, which is a growth level company over there. They have a set business over there, so we will check their revenues and everything, and compare those things with the Amazon, whether what Amazon can do or what Amazon cannot do, and we fix up our analysis, or fix up our valuation according to that. So this is the comparative analysis. Third is revenue multiples. Now revenue multiples is also a very simple analysis where, according to the business segment, right, the revenue multiples happen. So whatever revenue is being generated by the company, say for example, if they are generating 50 crore of revenue and they are having an EBITDA of around 20%, so 10 crore ka EBITDA आपका होता है, right? So according to that, in the similar sector, for example, three का multiple चलता है, or five multiples of revenue or 3 multiples of the EBITDA. So according to that, it happens, say अगर आपने 50 crore का revenue किया है, so 3 multiples से the valuation should be 150 crore for that particular entity in that particular segment. And if EBITDA is there, kind of that, so 10 crore का होता है and 50 crore. So it depends on the aspects and the sectoral preferences. So for example, if we do healthcare, right, if any company is there which is producing medicines, right, so उसका valuation किस तरह से होता है कि if they are into the GMP, general medicine practice, so उसमें valuation का कम मिलता है. But if they are having WHO GMP, the multiples would be growing ahead. If they are US FDA, they are even further going ahead in terms of revenue multiples. So if an example, if they are just going the revenue of 100 crore in a particular year, and they are willing to do the fundraise, if they are GMP, they may get maximum up to 2. So 200 crore का valuation को मिलेगा. But if they are WHO GMP, they might be go anywhere between 2% to 3%, or sorry, 2x to 3x, or probably a little more than that. So 300 350 crore का valuation मिल सकता है. But if they are in the US FDA, they may go beyond that. So there are several aspects to do the valuation, and उसमें आपका such kind of like licensing, जैसा मैंने आपको बताया, USFDA and all those things, it puts a major impact on that. Apart from that, if you do have any kind of patents, that is also putting a deep impact on that. If patent is only for India, there is a different method, but if patent is globally accepted, that's a huge thing. So these are the factors, right? And in terms of valuation. Now, valuation को कौन सी चीजें affect करती हैं? Whether it can take it ahead or it can take it down, right? So these are the potentials. One is market size and potential. So whatever startups, whatever business idea or technological platform or software that you are bringing up, what kind of mass it would be attracting, number one. What kind of potential it is having in terms of growth in the market, and number third, whether it is for the domestic period people also, or it can grow international. So these are the pointers that affects the valuation very much, right? So if there is any healthcare, as I mentioned, if there is any software for the healthcare, it can grow global, right? But if there is any particular agri-tech or any particular marketplace, that may not grow in a global basis. That could be a regional or that could be a domestic kind of business, right? So there is a huge difference in that. Number two, traction. What kind of revenue the startup has already generated through that particular business idea or the software or whatsoever they have brought in? What kind of growth potential is there? What kind of user engagement is there? Like, for example, if you have seen this app called Ola Uber app is there, or the Rapido is there, or any sports app is there, like My Play or some those apps, right? So they have a very individual user engagement. So millions of people they have downloaded, and millions of people are playing that or using that particular app on the regular basis. So that is also a great thing, because individual user using that, and you are taking all those datas with you, and you can turn those datas in the revenue, right? So that's a big thing. So the the bigger the number of the masses, the bigger the valuation is. So that is a simple thing. What and that would be generating the traction of the revenue for you. What kind of team quality you have, right? For example, if the promoters are there and they are well versed with the technology, whatever they have brought in, say from if that is an healthcare startup and the promoters are doctors or from healthcare, or they particular probably they know the segment well, that would be creating a good valuation. Or if the promoters they themselves are not that great, but their team, the technical development team or the advisors on their team, right? If they are from that particular segment, it clearly shows that you are focused, and you can take the business very much ahead into that particular offering, and that can put very much positive impact into the valuation product. What kind of product and technology you are using, that is also a main thing right now. If you see AI, AR, ML, and XR, even XR is coming up, that is extreme reality. So these kind of platforms are coming up. AI is taking huge, and now all the new startups are taking AI's help in creating the software or whatsoever is there they are bringing up. So that is also a new thing. If you are remaining in the era of C++ or whatsoever is there, you are lagging behind. So it is better to adopt new technologies every time whenever it is being approached, and you can get your valuation in a higher side. What is the competitive landscape? A competition should always be there. It should not be like that you are bringing something new where there is no apple to apple comparison there, or apple to mango comparison. At least some kind of comparison should be there, but it should also not be like that where every Tom, Dick, and Harry is already there into the market. They are already doing that, and you are also doing the same thing. It should not happen, because it would bring your valuation down, and it would uh, even affect your fundraise project also, right? I'll just give you the example. I do have another proposal for the marketplaces, right? Marketplaces like Amazon in general. If we talk about marketplace or e-com, generally happens Amazon, Flipkart, Mintra, all these things are coming up. So I do have a platform which is differentiated, right? Which is targeting the agri commodity, but still people are not able to understand the differentiation between that, and that is the reason the startup is still lagging behind for that particular fundraise. Though they are doing good, they have some kind of good revenue. They have done in 2 crore revenue, net revenue, in just 1 month of their 1 year of their operations, and the product is very good. It is globally scalable, but still, since those people, the promoters, are not able to make the understand the differentiation to the investors, they are still lagging behind the on the funder side. Valuation is okay. They are open to downgrade the valuation. They are supported by IIT Kharagpur, but still they wish to downgrade that valuation to get the fundraise, but they are still lagging behind because the market segment is marketplace. So this is also a very deep factor which is affecting the valuation and the fundraise program, right? And investor sentiment is again a very big contributed to the valuation and although and the fundraise, because what happens, uh, any investor, अगर आप भी खुद as an individual investor or any institutional investors or the investment companies, what they wish to do in general, they wish to get money out of money, as simple as that, right? So ROI makes a difference. Now there was a boom between 2016 to 2022, I would guess, the 6 year boom, where almost the Indian startups would take a leap like anything, and now they are sitting at a count of 117,000, right? So this was a period where sentiments were with the startup boost up, and investors were making good money out of that, 2x, 3x, 5x. They have made it. In fact, I would say one I know one of the investors, they are very close to me. They put in 10 lakh, only 10 lakh rupees to Flipkart at the very initial stage. And when in 2018, when Flipkart was sold to the Walmart, right? So that investor, he made it 150 crore rupees. I won't name it, but this is how it does work. So when the ROI is good, the market is supporting the segment that you are bringing. It is very niche, and doing having a capital to do again, they would definitely put in money. Otherwise, if in case investors are looking that okay, real estate is booming and we should put in our money in real estate, or equity market, or the BSE is doing, or NSE is doing great, or Nasdaq is supposed to jump in with something new, they would turn their money to those routes also, right? As I mentioned, they just wish to get money out of money. So it is how it is. So though investor sentiments are also putting those kind of impact to the valuation fundraise, right? So these are the things. And the final stage is process of fundraise. हम लोगों ने ये सब कुछ डिसाइड किया है, what are the stages, what kind of fundraise are there, what are the stage of fundraise are there, what is the valuation. Now how to do the fundraise, this is the main thing where startup should uh, do a deep due diligence in self, and they do a lot of they should do a lot of work on that, and then probably they can get the fundraise. So there are the stages. First is preparation, second is identify the right investors, third is term sheet, fourth is due diligence, and the fifth is final agreement and closing, right? So let's start with preparation. So preparation is basically to showcase whatever you are bringing to the public, whatever you're bringing to the market. It should be showcased in a proper manner to the investors, right? The pitch deck, which is the mirror of your thought process, which is mirror of your business proposition, right? So that should be prepared in a better manner, जहाँ पर आप the problem statement, whatever the solution you are bringing up, what is the market potential, and what are other players or the competitors are there, then what could be the financial projections you would be having, and then lately the last would be the how much money you need and what kind of allocation you have planned for that particular fundraise. So all these things would be there in the pitch deck, and then investor at first go, he would understand at least the basics of your startups, and then he can measure whether he would like to take it ahead and would like to contact with you, discuss with you in a deeper manner, or he would like to refuse it. So this is the preparation. Second, identify the right investors and opportunity. This is the main thing, identify the right investors. As I mentioned earlier, investors have different pockets. Investors have different preferences of the sectors. Investors have different stages of this that investment. राइट सो इन तीन चीजों का ख्याल आपको रखना पड़ता है, अदरवाइज यू वुड बी जस्ट hitting the bushes and nothing would be happening. So right kind of investors would should be there, should be approached, and this is how they would be coming to discuss with you over the call or over the personal meeting, right? So it is like that. And investor, it would even be appropriate if the investor not only brings up the money, but either he can bring you the strategy along with the money, or they can bring up the market or market linkage or the network or the technology along with them, so that your growth would be even faster, right? So you should pick the investors rightly. That is the main thing. Third team is term sheet. Now this is the third stage where you have prepared your pitch deck and everything. You have find out the right investor, and that investors have discussed with you on the several occasions, and he has understood it deeply, that what kind of business you are bringing and what is the growth and what kind of ROI he can get it. Then investor would come up with the term sheet. Now, what is the term sheet? Term sheet is basic offering from the investors, where you would say, okay, theek hai, I'll put in this kind of money, I'll put in this kind of way, whether he can go for the direct equity, or whether he can go for a safe note, or he would like to go for a CCD kind of thing, right? So, and that if the CCD or safe note is there, what kind of interest would be there, what kind of period would be there for that money would be locking, and all those things, term sheet would be there according to your general mutual understanding at first, before having any due diligence. So this is the first offering from the investor, we can say. Okay, so this is the term sheet. Now you both are at first level, if you both the people, means investor and startup, is agreed on all those things, they would sign the term sheet, and that would be happening. Money is not coming, it is just the paper that is signed, so that they are locked in at least in a manner, right? Now the fourth study, due diligence. Once the term sheet is signed, due diligence is coming up. Due diligence is basically a kundli making for the startup. I'm sorry to say that, but it is like that. So investor or startup or both, right? They can bring up one particular auditor. It can be either any top four of that, EY या PwC या किसी को लेके जा सकते हैं if they are at the growth level, or any other. There are people in the market who are doing the due diligence and valuation and all those things. So they can hire those people, and that particular agency would do the entire due diligence, be it financial due diligence, be it a market due diligence, be it promoted due diligence, and their background checking and everything, and what kind of whatever positions you have made, they would do dig deeper in that. They would take all the documents from you, they would verify everything, and then they would submit a report to the investor for that due diligence, and that would be the final step for the fundraise, right? So due diligence is a must. A startup should pass that due diligence process, then and then only they are going to get the money. Otherwise, they would need to start from scratch. So this is how it is. Now, final agreement and closing. This is the final stage. After getting the due diligence report, investor would get, if there are too many negative marks, definitely investors say, okay, I'm not going ahead, right? So it is closed there only. But if the due diligence report is okay, if everything is okay, whatever you said and whatever investor assumed, if it is matching, you will get the money with the final agreement. And now there is third term also, but due diligence is there, but there are a few things that were not matching to whatever you convey to the investor. It was crossing them, or it was somehow up or down from that particular statement or details that you provided to the investors. Then investor, you may again have a discussion across the table, and then probably your valuation may go down or up. Your fundraise or amount what is there that they've gone up, or probably the investor can, if he is interested, he would put in money, but probably he may put in some new terms which were not there on the term sheet, right, after getting the due diligence report. So it is like that. And if you guys are mutually agreed on whatsoever is there, which and agreement is built up, you would sign the agreement, and the funding would be coming up according to the mutual understanding. The funding, say for example, if you are raising $1 million, it is also possible that you are having that potential, so आपको पूरा 1 million एक ही बार में मिल सकता है, or else probably you may get that money into the tranches. Say for example, investors तो कह सकता है ठीक है मैं 3 tranche में आपको दूंगा, so first money would be $300,000, second would be 300,000, and third would be $400,000 according to the milestone that you have set up. So आपने पहले milestone आपको 3 लाख रुपए मिला, you have set up the milestone, and then another 3 lakhs would be coming up, and then another 4 lakhs would be coming up. So this is how it is. If you are not achieving those milestones, if you are not doing any business, or if you are not doing whatsoever you were supposed to do, the money would not be coming for sure, right? So this is how it does work. Now, so any questions till this stage? If anybody is having any questions, please shoot.
Hi, this is Devang here.
Yes, Devang sir.
How do I approach you for funding?
Yes, sir. What you can do is you can note down my number, that is 73.
Just
I'll
1
just,
minute, one.
yeah, I'll just
Yeah,
give
please
one
give it to me.
check. I'll just give
73
one 507
73507
495
495
93.
93.
Yeah,
And if you have an email ID, I'd rather disturb you on email before I call you.
I'm just putting it on chat.
Right. Thank you, sir. Thank you so much.
Right, sir? It is there. Okay. So any further questions for the fundraising or anything? Any doubt? If you need any clarification, I'm here. Nothing? Great. So startups, the need of the era. I think we all know what is coming up. All these 170,000 out of them, at least 30 or 40s are there, or at least hundreds are there who are doing great. And we all know everything that how we are using all those things in different aspects and different sectors, and we are getting benefited, right? So why startups are needing, I'll just give a nutshell. They are the catalyst of for innovation. Everybody is looking for the innovation and trying to bring something new, and that is needed for the our sustainable living for a longer period, because the population is growing up, climate is changing at the global space in a very rapid space, and all these uh, things would need to get some kind of solutions for a better living across the globe, right? Economic growth and job creation. Uh, our startups till date, they have created around 1.2 million jobs, physical jobs. That is a great amount, the great number for the job creation. And the same thing, the same way, economic growth is also happening in the country. They are contributing our GST and overall growth of the individuals. So this is how it is. They are looking for that, and they are providing all those services, and they still need to provide and grow in a better manner in that particular aspect, right? Addressing global challenges, as I mentioned, climate change and all those things, agriculture, that would need to be boosted for a sustainable living, right? Next slide, ma'am. Thank you. Tackling changing consumer demand. Yes, the new generation called Gen Z, they are very demanding and they are tech savvy generation. They need everything on the touch of mobile. So this is how it is, and according to their requirement, according to their uh, approach, I think the new startups should come and they bring up the solutions, because it would be very much needed. Otherwise, startup would be out of the market. Driving social change, kind of women entrepreneurship, farmers development, their loan, poverty, all those things are there, are very challenging across the globe. And if any startup is tackling all those things, definitely they are having a great future ahead. Enhancing global connectivity, that is the main thing, because now global, the world is become a global village, so everybody is willing to get in touch with something additional, something new, and probably they may contribute in the growth or that particular startup's growth or their own personal growth. So probably that startup can bring up something new, and they can transform that particular sector in the global space. Be it, as I mentioned, that healthcare for the brain imaging and such kind of things, it is happening, and we need more innovation, more solutions to counter the challenges, right? All these things. So in short, this is the startup journey, sir. According to my understanding and experience, small experience, I tried to convey you all these things, and I hope I pointed out it very clearly. And still, if there is any doubts, any questions, any queries there, I'm here to counter that, and here to clarify you whatever best I can do. Otherwise, through email and through phone number, I can you can get in touch with me, and I can help you out in whatsoever minutes there. As I mentioned, we are not only supporting for the fundraise, we are also supporting for the joint ventures, market linkage, and all those things. We have several solutions, including space tech. We have one space tech from the Australia for whom we are trying to get the fundraise, and we are also supporting the satellite companies to take their services in near future so that they can shoot up their satellites into the space in the lower Earth orbit for the betterment of the world. So this is how it is. I hope I was very much clear. Any doubt, any questions? I am all ears. Okay, so Cheryl has asked me, hi sir, what's the difference between startup and small business? So Cheryl, I have we have taken this. Yeah, the slide is there. If needed, I can share these the presentation with you. The comparison, clear comparison is given between the traditional businesses and the startups, right? You can go through it. In general, I would just clarify you once again. Uh, Traditional business, they are basically mom and pop business, or the businesses from the pass on to the legacies, like say kind of any business or any kirana store or electronic store that you are showing, that is called the traditional business. While startup is basically bringing up something new, something innovative. Probably they are, at most of the time, they are taking the help of technology to uh, challenge one particular issue or the problem that public is facing, right? So these are the basics. Startups can grow in a very rapid manner, while traditional businesses or small businesses, they can't grow in that particular manner, but yeah, they can have a sustainable growth over the period. Decision making, of course, decision making is very much easier in the traditional business, because most of the time they are the promoter hold, or the partnership forms are there. Sometimes if the company is manufacturing, they might be having the hierarchical kind of MD, CEO, CFO kind of that. So decision making, but still the decision making would be faster in that traditional business. Startups would be having a different decision making process, because there are different people attached from the different sectors. They are the investors, there are the strategic investors, there are the angels, there are the technical people, and the promoters, of course. So on a particular decision, a varied view would be coming up, and then a decision would be having a fine tuning, and then it would be coming up. So probably that decision would be far better and effective than the any decision coming or strategy coming up from the traditional business. So these are the basics, the basic difference between the traditional business and the startups, right? I hope I'm clear. Yeah, sure. I can share the PPT. Kindly put in your email. Send me an email on my IDs, and I'll do that. Right. Any other questions? Nothing. Okay, great. So I think Sunita ji, if everybody is okay, probably we can wrap it up. Or if you have anything else.
No, sir. Surely we can stop the session here. Still, if anyone is having question, you can unmute yourself and please ask.
Please share your email ID, sir.
I have given you, sir. I have given on the chat.
But it is not visible.
Okay. I'm giving.
Sir, if you give Sunita ji the permission to share the PPT, she already has everybody's email IDs. It will become a lot simpler.
Yeah, that would be okay. That would be okay if Sunita ji is okay.
Would that be okay with you, Sunita ji?
Yes. Surely we will share sir's PPT.
Thank you so much.
Thank you.
Okay.
Thank you.
So I hope
Yeah.
I hope I was clear, and I was able to convey the subject in a layman's language, so that everybody can understand it properly.
Yes, perfectly, sir. If there is no question, at least a few of you can share the feedback about a sir's session, and then we can stop it.
One very basic question I have to ask. How old can a startup be before they can approach for any kind of funding? Because you put up a valuation context how will a startup have a valuation if they're just coming up with an idea?
Ma'am, no. That is where I told you valuation. It does not affect. कुछ स्टार्टअप ऐसे होते हैं मैम जो सीड फंडिंग में हो जाता है. In India, typically in India, pre-seed stage is almost not happening. कोई कोई होगा जिसको किसी को मिला होगा 100 में से किसी एक को, इवन thousands में से किसी एक को. By otherwise in India, it is not happening. Yeah, of course in US it does happen because US is having a very big appetite, a risk appetite, so that they do take bets on the startups and they grow like anything. In India, it does not happen on the pre-seed. There is no particular time period, say kind of 6 months or 1 year or 2 years, you should be all that and then you should come for the fundraise. No, it is not like that. If your idea is great, simpler, and it can attract masses, or probably it can uh, uh, support in to solve a very big problem, be it healthcare or be whatsoever is the segment. Definitely, you can get the fundraise on the seed stage or on the pre-series A. Before series A, you would it is always better to put in your own money and money from the friends and family kind of thing to grow and to showcase at least something to the investors, right? And one aspect I would like to convey to everybody here, as an investee or as a startup, you know everything, right? So ये इस तरह से है, this is how I would grow, this is how this would be this solving this particular problem, or this is how it would be supporting to the masses and everything. But if you, on the other hand, if you can think like an investor for a moment, and you will, okay, if you are having 100 crores in your kitty and this startup, your own startup, is coming to you for the fundraise, how would you look at it? If you can imagine that particular thing, you would be sorted in a big way at every stage. You must have that idea of that investor's mindset, at least in a manner, so that you can prepare your startup, you can prepare your pitch, you can prepare your business idea accordingly. And अगर आप वो करते हैं, you are definitely going to get fundraised because you know how the investors would be thinking. This practice, though we are the consultant, but at first, when you are approaching us, we are not the consultant. When we are discussing with you, we are the investors. We are having that investors mindset at first, and we would like to understand ourselves, if we are the investors, whether we would be putting our money in your startup or not. If our conscience is saying a no, we are not taking that ahead. Because if we ourselves are not convinced on your idea, how as a consultant we can approach and tell investors ki baba aap apna paisa isme dal do? Our conscience does not allow. So this is the process, and this process you can implement, or any startup can implement, and definitely there would be a big difference in your understanding, and according to that you would prepare your things, and then if you approach the investors, you would be getting better results. There is nothing like stage, there is nothing like particular time period or so. It is not like that. Time period loan mein hota hai. If you are approaching to the bankers and you are looking for the loan, bankers would say we need at least 3 years vintage and all those things. Angel investments or startup investments, it does not like that. If your idea is great, if you are bringing something new, something beneficial, definitely you would get money. I hope I'm clear. Hello.
Very clear, sir. Thank you so much.
Thank you. Thank you. Is there any other question from anybody?
Hello.
Yes, sir.
Can you hear me? Good afternoon, sir.
Surely. Good evening, sir.
Very good evening, Mayur, sir. Thank you for very insightful session.
Thank you.
The basic one or two questions I do have is, one is what prompted me to ask this question is the example you gave me about one of the persons or gentleman who invested around 10 lakhs or something in Flipkart when they started and so on. The two questions that prompted me was, first, is there any reliable site? Suppose you're looking from investor point, not as a startup point, like personally talking of myself. If I was to be an investor, of course, not a big multi-million or crores of rupees, is there a site where people are looking for some minimum amount of investment, a reliable website, number one. And number two, with person like me who is actually a Canadian citizen presently in India,
Mhm.
and with 20, 25 years experience abroad, same in
Mhm.
Middle East and North America and the USA.
Mhm.
Can I, because you did mention that point that you can, the startups looking for investor, they can have somebody with skills and experience as well.
Yeah.
So if I was to do skills and investment together, just
Mhm.
skills, what would be my options?
The options in terms of you are looking for any startup or how?
No, to merge with a startup with funds as well as skills, or just skills or just funds.
Uh,
Am I clear in my question? No, Mayur sir? Hello? Can you hear me, sir? Hello?
Yeah, he is there actually, but I don't know, maybe
Oh,
due.
sorry. Yeah, I thought maybe I lost my connection or
No,
something.
actually, sir is also there, but I don't know what happened with maybe facing some network issue.
Okay, no, that's fine. As long as I am online. Thank you, Sunita ma'am.
Thank you. Mayur sir, are you able to hear us? I think maybe attending some call. He just
Okay, fine. That's great. No problem. Yeah, his picture was also not visible since the presentation.
Yeah.
Once you started sharing the slides, he was off camera.
Yeah.
It was nice to see him communicate.
Um,
hello.
Hello.
Yeah, Manoj, sorry, it got disconnected. I'm sorry.
No need apologies, sir. As long as
Yeah,
you
yeah.
know,
So,
no problem.
yeah. So, about your sector, किस sector में आपका expertise है and what kind of experience you are having and what kind of the investment pool that you are having. If you can give me a gist, probably I can help you out in that.
Okay, anywhere in the tune of like around 50 lakhs, suppose.
Okay. And what
And
kind of sectors you have served or your expertise?
automation and ERPs, operations management, retail, automotive, medical. I've worked all across the business sectors to be an ERP consultant.
Okay. Great. So probably you can be a great asset for mostly for an IT company, right?
Yes, Mayur,
And
so that's
apart
right.
from that, and healthcare. I don't know what kind of healthcare you have done it.
Medical products manufacturing company in Saudi Arabia as well as United States. That was a
Kind of
brief stint.
medicines, kind of medicines.
No, the products like the gauze bandages and cotton swabs and sterile sets and stuff like that.
Okay, surgical kind of stuff.
Surgical, but again, fully manufacturing, estimation, project management, planning, schedule.
Okay. So probably, yeah, if any IT company is there who is looking for money to grow further, they may probably get you on board as an investor plus as an advisor. And apart
Great.
from that, you probably can put in your money to one particular good startup, or you can bifurcate your money into 2 or 3 tranches, say 25-25 लाख के दो कर सकते हैं या 50 लाख के एक कर सकते हैं.
जी.
Select a particular segment and put in your money, a patient money in there. 2 साल या 3 साल के अंदर रखें, definitely you would get good money in that. And
Okay.
side by side, you can start your advisory and you can do the stuff for the IT companies. I do have an
Thora I
idea.
don't know. I'm also based. Sorry,
Yeah.
I am also based in Pune only. Actually, I'm not sure if you are in Pune or do you visit Pune
Surely,
because
sir,
you're
we
based
can
out of
meet up. We can meet up. We are Punetics.
that. I would be extremely appreciable.
No, definitely. Pleasure would always be mine. Definitely, हम लोग मिल सकते हैं और we can discuss accordingly. We do have some good
I would
propositions.
really. That would be very much helpful. How do I connect with you then in that case, Mayur sir?
I do have a mail ID, or else you just note down my phone number. That is,
Please.
yeah, 73
Yeah.
507
Yes, sir.
495
Yes, sir.
93.
93. Great.
Yeah.
Thank you very much, Mayur. Actually, you gave a lot in terms of information, and actually, I've been abroad for almost 25 years. Just before COVID, I landed because of my senior parents. So I won't take the time of the participants. I would connect with you. Is that
Okay.
your WhatsApp number too? As if I don't
Yeah,
want
yeah,
to bother
same,
you.
same, 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 same.
Thank you so much for your time. Thank you so much, sir. I will connect with you.
Pleasure is all mine. Pleasure is all mine, sir. Yeah. Is there any other questions or doubts, or if there any other insight that I should get and I should get enlightened from anybody else? There are several seniors are there who have experienced more than me.
I think there are many entrepreneurs in the audience as a participants, and many can connect you, I think, very soon, as you have shared your contact number and the email ID.
Surely, ma'am, surely I would definitely help them out as best as possible, and I would happy to do that. That is my work, and
Even
I'm
SCDL will be very happy. The participant like Manoj sir and the other entrepreneurs also, we would like to invite you as our guest speaker for the upcoming sessions. So, please,
Absolutely. It would be great pleasure and honor. In fact, on SCDL's website, I have noticed the volunteer activities for the skills development thing.
yes,
Yes, Dr. Sunita ma'am, I would be more than happy to volunteer myself for the upcoming new generation as far as international standards of manufacturing standards, if I was to say, and the interviewing skills or looking up to themselves, walking tall and proud. I would be more than happy to deliver because you are based in Kivle also, I think you have a campus.
yes, sir. Yes, yes.
Yes, and I am in Pimpri, only few stones throw away, if I was to say. Not really.
It will be very great, sir. We can surely be in touch with you as your email ID is with us. I hope the email ID is by the name of Manoj only.
Yes, manojain30@yahoo.com.
Thank you. So, as we conclude this enlightening session, I would like to express our heartfelt thanks to Mr. Mayur Mehta for giving his precious time and the valuable insights. Sir, I think your expertise has certainly given us a lot to think about, and we are grateful for your willingness to share your knowledge with us. We even thanks to all our enthusiastic participants, all the faculty members, the students, who participated in this enrichful session. And the last special thanks to SCDL management for conducting this activity. Surely from the participants, those who are truly wanted to give sessions or wanted to act as a guest speaker for SCDL students, we will be very happy to host you as a guest speaker for our sessions. Please do write to us for this type of activities. Thank you so much. Thanks a lot for participating in this event, in this session, and have a great day ahead. Thanks a lot.
Thank you, Dr. Sinta. Pleasure is all mine, and I am really grateful. Actually, I am happy because if I compare to this with myself when I was in college, we were not having all these kind of stuff at that time, and we were lacking. I was thinking like, why it is not happening everywhere? It is just 100% job oriented courses and all those things, nothing else. So I was being a Gujarati myself. I was always thinking that क्यों हर किसी को जॉब ही करवाना है why nobody is talking about business and creating job. Now this is the era. Finally we are having that era, and we are having all those people are having this kind of support from the institution like yours, where they can learn new things and they can bring up something to the world. So
Yes.
I wish all the best to everybody, and thanks a lot. Pleasure is all mine.
Thank you, everyone.
Thank you,
you.
sir. Thank you, ma'am.
Thank you so much, Dr. Mayur sir, Dr. Sunita ma'am, Mayur sir. And
Thank you.
right, and you rightly phrased, even I remember back old days from DY Patil, where there used to be one computer in the computer lab and we used to book that session. And now everything is at the doorstep, and that's
That's
so I strongly believe in passing it on to the next generation rather than just still been focused only on like that herd mentality. Just civil engineering kar lo, mechanical engineering kar lo, scope kisme hai. Still I see that persistent in the society. So I feel like helpless, and I'm looking for a source and outlet like SCDL, that we can contribute and be happy on this planet Earth, and we do our due diligence to the next generation. so that they don't learn things the hard way and put the technology to best use as soon as possible and grow 10x
Surely.
faster.
Yeah, surely, Manoj, it is very much needed, and that kind of support can boost the confidence in the start of the new entrepreneurs, and they can
Yeah.
do really wonder if they are getting support, because most of the time still they are not getting that kind of support.
No, then still they are very conscious when it comes to looking up to international standards, because I have personally was a victim way back then in 2000 when I landed in Canada. 10 years stint I had in Dubai, Sharjah and Saudi Arabia, and then in United States and in Canada. Now I'm a Canadian citizen in India, and my slogan or the tagline is North America at your doorstep. I'm trying to do this.
Great
Thank you
interact
so much.
with you, Manojji, and looking forward. Yeah, you have my number. We can communicate that.
We'll
Thank you.
connect. Thank you so much.
Thank you, Dr. Sunita.
Thank you.
Thank you.